right, you're going to want to pay close attention to this. The stock market, it's about to go through a massive shift. I'm talking about a change that's going to create a whole new wave of millionaires by 2026. And if you stick with me, I'm going to show you exactly how you can be one of them. And let me be crystal clear about this. The 2026 stock market absolutely will make normal people millionaires. Look, this isn't some wild guess I'm throwing out there. It's based on a really fundamental change that's, well, it's already happening. But, and this is a huge but, it's not going to be because you got lucky and found the next Nvidia. No way. If you're out there just chasing those lottery ticket stocks, honestly, you're probably going to get burned badly.
So let's just cut through the noise, okay? We're going to break down this whole 2026 millionaire idea and really dig into why this time around it's going to be so different.
Think about the last 10 years, right? Investing felt kind of easy. Interest rates were practically zero, money was cheap and flowing everywhere. You could pretty much throw a dart at a big tech stock and make money. Well, that party is officially over. Money isn't free anymore. Volatility is back with a vengeance. And that old strategy of just buy tech blindly, it's done. Now the only thing that's going to matter is a company's actual performance. You know, it's fundamentals. And this new environment, oh man, it's a serious reality check. It's going to expose all those portfolios that were built on nothing but hype and hope. It's going to pull back the curtain on everyone who thought they were a genius just because the whole market was going up. You've heard the saying, right? When the tide goes out, you find out who's been swimming naked. And that brings us to a really important moment, a crossroads. See, when the market starts getting choppy like this, two types of people always emerge. First, you've got the speculators. They get spooked, they panic, and they sell everything, usually at a loss. But then you have the investors. They see the chaos and quietly, patiently start building their wealth. So the question you have to ask yourself looking ahead to 2026 is, which one are you going to be? Okay, so that is the big shift we're talking about. It's this move from being a speculator to becoming a real investor. But what does that actually look like? Let's dive in. The difference is, well, it's night and day. A speculator, they see a ticker symbol. They chase stories. They get caught up in the hype. They're constantly reacting to every little bit of market noise. An investor, on the other hand, sees a business. They're buying a piece of a real company. They're digging into the fundamentals, and when everyone else is panicking because of volatility, they see opportunity. It's all about building a solid, long-term process, not just hoping for a quick win. And really, this whole thing boils down to one incredibly important idea: understanding the difference between price and value. See, price is just that number blinking on your screen. It's what the market is offering you right now. But value? That's what the business is actually worth based on all the cash it's going to generate in the future. And the real secret to building wealth, the real secret, is buying something when its price is way below its true value. This leads us to maybe the most important concept in all of investing, the margin of safety. Think about it like this. An engineer is building a bridge that needs to support a 10,000-pound train. Do they build it to hold exactly 10,000 pounds? Of course not. That'd be insane. They build it to hold 20,000 pounds. That giant buffer, that's their margin of safety. You need to do the exact same thing as an investor. If you figure out a business is worth $100 a share, you don't buy it at 98. You wait until you can buy it at a serious discount. That's what protects you when things go wrong. Hey, by the way, if this is all starting to make sense and you're finding this valuable, could you do me a quick favor? Just take a second to hit that like button and subscribe to the Stock Market Mojo channel. It really helps, and our goal is to keep bringing you more insights just like this. Okay, so that's the theory, but let's get practical. How does this actually work in the real world? How do you find value when it feels like the market is just going nuts? All right, let's look at a real-world example. Take a company like Southwest Airlines. Now, this is a perfect case study of what an investor should be looking for. You've got a historically great company, a business we all understand that has just been beaten down recently because of some problems. If you look back before all the craziness of the last few years, Southwest was an absolute machine. Just look at these numbers. Year after year, consistent, solid profits. We're talking about a strong business, a powerful brand. This is the signature of a high-quality company, not some speculative bet.
But then, of course, the pandemic hit, and you can see the damage right here. The recent years have dragged their average profit margin way down, from a 10-year average of almost 5% to a 5-year average of just over 1%. Now, a speculator looks at that and runs for the hills, but a smart investor, they don't see a broken company. They see a potential bounce-back story.
So the whole thesis is pretty simple, right? You have a well-run company that's dealing with some temporary headwinds. The big idea is that as things normalize, their profit margins have a really good chance of getting back to where they used to be. And that, my friends, is where the real opportunity is. And this example really gets us to the most important point of this entire discussion, the real path to wealth in the stock market. It's not about hitting home runs. It has almost nothing to do with that. It's all about habits.
What are those habits? Well, for one, successful investors stay invested. They don't jump in and out. They have a process, and they stick to it. They're not swinging for the fences every time. They're happy with consistent singles and doubles. They let time and the magic of compounding do all the heavy lifting for them. And probably the most important thing, they don't panic when things get volatile. Because here's the honest-to-goodness truth. Millionaires aren't made overnight in some crazy bull run. They are made by the habits they practice day in and day out, year after year. So, 2026 is coming, and you have a choice to make. Are you going to be a speculator, just hoping to get lucky? Or are you going to be an investor, someone who methodically builds real, lasting wealth? The choice is yours. And if you're ready to be an investor, make sure you subscribe to the Stock Market Mojo channel, because we're going to be here to help you every step of the way.